Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shail D'Souza as well. Shail, a very good afternoon to you. And what's the market seeming like today? Where should we expect it now today in terms of, because every last half an hour, last couple of hours, we always see a different move from what we've seen in the morning trade always.
Absolutely.
For the last few trading
Vinny,
sessions.
talking about where the market will settle, I wouldn't be the right person to talk about that, given the fact that you have technical experts. Aamar will be joining in. We can ask him where the markets will end. But looking at the way the markets are panning out at this point in time, yes, it's been a very flip-floppy day when it comes to the markets. We have been actually seeing a range-bound trading session, now actually testing the 21,500 when it comes to the Nifty, while Nifty Bank has recovered from the day's lowest point, but is actually there, stagnant move coming in from Nifty Bank as well. Advanced decline ratio, however, right now is tilted a tad bit to the in the favors of the declines. Talking about the list of gainers, you have Adani Enterprises, Cipla, HCL Tech among the top 3 gainers on the Nifty, while on the flip side is NTPC that's seeing downtick of as much as 3.5%. ONGC, BPCL are the other set of losers. So that's the way how the markets are actually panning out, with the PSE index being the top sectoral loser, Vinny.
Okay, surely that's how the market is panning like. But let's bring on board our technical analyst for today. We have Aamar Singh joining in with us, while from the research team, we have Ankita joining in with us. A very good afternoon to both of you all as well. And let me start with the first stock that is in focus. And first couple of stocks we're going to name. So Avanti Feeds, Apex Frozen, Coastal Corp, all these stocks have been in focus today, buzzing away in trade. And the main reason for that is that there's a bit of a pain in Ecuador, which could actually turn out to be quite positive for these Indian companies. Price realization is lower in Ecuador despite the rising exports that we've seen in 2023. Now, political risks in Ecuador against the shrimp sector as well as variant of El Nino is likely to impact the production this season as well. So, India, let's not forget, is the second largest exporter after Ecuador, and this is according to channel checks that we are picking up. So, yes, seems like trigger for shrimp stocks could be quite positive in Q3 and Q4 because of these issues, and stocks could see some uptick coming in going forward as well. As of now, today, you can see both these stocks, Avanti Feeds as well as Coastal Corp, both of them have been buzzing away in trade.
Alright, moving on, let's talk about CMECH, and that particular counter is in focus in today's trading session. It saw an uptick of as much as 4%, taking the stock to the highest level since October 2022. In fact, now it has risen far more than those levels, 7.5% uptick. The company has entered into agreement with the Ships and Boats Oil Services for transporting vessel Sea Diamond from Alexandria, Egypt to Mumbai Anchorage, and the fees for the service is approximately $6.2 million or so, or rather $622 million. If you look at CMECH, it's on track for a 4th consecutive session, and that's one of the reasons why that stock is in focus. Yes, please ignore the pricing of it. There seems some error in that, but otherwise, if you look at the stock, it's trading higher by about 7% as we speak.
Okay, let's move on and talk about Cochin Shipyard on the charts then. And in terms of that, Aamar, where are you seeing Cochin Shipyard headed now? Today surely is buzzing away in trade, but before that, we've seen a bit of a consolidation coming in for this one. So what's the view for this?
Yeah, a very good afternoon. So talking about Cochin Shipyard, you rightly said that the stock was in for consolidation, and the consolidation lasted almost 8 to 10 trading sessions. And today again, we've seen that the stock has broken out of that zone, and also it's on significant volumes. Looking at the trend from a medium term or a long term perspective, the stock continues to remain very strong on the long term as well as the intermediate term trend. So the stock has a potential of rallying towards 785, 790 levels. And on the downside, the stock has now made very strong base somewhere around the 640, 650 zone. So this is one stock one can definitely look at. It needs to sustain above today's high. That's close to 767. So trading above 750, 760 zone, the stock is strong and continues to display strength. So being on the long side makes more sense. On any decent correction, it's a stock one can definitely look at adding.
Alright, moving on, Ankita, let's shift the focus on the pharma pack, then GSK Pharma. Why is this one in focus?
Well, yes, GSK Pharma is in focus in how it is soaring more than 6.5% in trade right now. This is on the back of a brokerage note that came out by BNK, and they're maintaining a buy on this counter, and they've hiked the target price to 2,450 rupees from 1,665 rupees per share. Now, they feel that the improved business outlook on the back of new launches and operational efficiencies is a big positive for the company. The next trigger is likely to be the launch of the 2 oncology drugs by the company. The VRS event will lead to cost savings and boost productivity. Also, the specialty portfolio will continue to focus on the 2 niche products, and the vaccine portfolio is expected to grow in double digit. And on the back of this positive note and hiking of the target price by BNK, GSK Pharma is soaring in trade, up and away 6.5% in trade.
Okay, let's move on and talk about another stock that is up and away in trade today, and that is Tanla Platforms, Aamar. This one surely has seen a very strong up move today. And, what is the view in terms of the charts? Obviously, before some time also we had seen a sharp rally coming in, then a correction. Now again today seems like the run-up is starting for Tanla Platforms. Is that something we could expect?
Yeah, I would say that if I look at the charts from a medium-term or a long-term perspective, that continues to remain positive, though the momentum, if you look at the momentum of the stock for the last, I would say, 6 months to be precise, it's been more of consolidation with a positive bias. Today, what we are seeing is the stock is trying to breach its recent high. So the recent high was 1178, which the stock had made on 14th of December. So the stock is trying to breach out that level. Today is a high 1174. So, and if you go back in time and we see that somewhere around October itself, it was trading around 1100, 1120, 2030 zone. So 1120, 1130 zone, that was a zone of resistance. The stock has taken out. Now it has a zone of resistance somewhere around 1180, 1200 zone. If that is taken out, then the stock is definitely headed higher towards its July highs of 1300 levels, because technically the stock is positive on the charts. So one should wait for the stock to sustain all the 1170, 1180 zone. Then the stock can witness a 8 to 10% rally from those levels.
Okay, surely keeping an eye out on that. Let's move on and talk about the next stock that is in focus, and that is Aptus Value. We have a brokerage note that's coming from Investec. They've initiated coverage on Aptus Value, initiated with a buy and a target price of 380 rupees per share. As of now, yes, the stock has given up all its morning gains, but when you look at it and what the brokerage is actually highlighting, they believe that Aptus operates in an under-penetrated segment as an in-house operating model, and the cost efficiency is something that is unparalleled. Track record is quite good of the company, as evidenced by its success in South India. Now, with the growth in Tamil Nadu slowing, execution in the newer states is important for them, and given its strong balance sheet, Aptus would be viewed as on a PE basis from now on. So they are expecting a 23% EPS growth over FY23 to FY26. So yes, Investec initiating a buy, but stock a bit subdued in trade as of now.
All right, moving on, let's put the spotlight on IGL, and that particular counter was then under pressure in today's trading session. If you look at the stock, is trading higher, rather lower, but about 4.8% or so on an intraday basis. Now it's recovered a tad bit. It's down about 2.8%. UBS has cut the rating on the stock to a sell from a buy, and also lowered the target price to 400 rupees per share now from 630 rupees per share earlier. If you look at 400 rupees per share target price, is actually low, approximately 4% or 6% lower from the current stock price. UBS sees a lackluster volume growth of IGL in the near term, and the core business at risk over the longer term. Therefore, the downgrade coming in for the counter, as well as a slash in the target price.
Let's move on and talk about the next stock on the technicals, and PNC Infra. Aamar, what are the charts indicating for PNC Infra?
Yeah, if I look at PNC Infra, this is again one stock which was in for consolidation for, I would say, many weeks and months altogether. And today we are seeing some sharp move in the stock. The stock is up more than 6%, and that also on significant volume. So that's a positive aspect. And even if you go back in time, so on 19th of December again, when the stock did witness some increased volatility, there also the volumes were significantly high, and also the delivery quantity was on the higher side as compared to the 50-day average. Having said that, if I look on the weekly charts also showing some positive strength. The monthly charts are also positive. So now the stock needs to sustain above the 378, 380 levels. So I would say 380, 400, that's going to be a zone of immediate resistance for the stock. Because if we go back and we see that in October of 2021, the stock had made a high of almost 400 levels. So sustaining above, I would say there would be some sort of profit booking happening around the 380, 400 zone, because that's going to act as a zone of resistance. But the stock is positive on the charts.
All right, that's the take coming in on the counter. But on that note, we slip into a break on this edition of Market Fatafat. More on the other side. Don't go anywhere.
Market Fatafat on ET now. Let's keep it going with all the stocks that have been buzzing in trade today. And moving on to stock number 9 for today, Ankita, Delta Corp. This one is in focus on the back of its numbers. How are they looking like?
The numbers don't look very nice, Vinny. In fact, the stock was knocked down more than 5% in trading session today, though we do see some buying coming after that. It was pretty flattish, and then we saw some buying coming in. But if you look at the numbers are, of the gaming segment, revenue was impacted, and, the consolidated PAT on a year-on-year basis was down a good 60%. The consolidated revenue was down 15%. Look at the EBITDA also, consolidated EBITDA, that came in at, that was down 45%, came in at 55 crores versus 102 crores last year. Also the margins, came in at 24% versus 37% last year. And on the back of, subdued numbers, we did see that stock was knocked down in trade at the start of the trading session. But currently, we do see some little bit of buying coming in there, so it's trading in the green as of now.
All right, that's Delta Corp for you. Recover sharply from the day's lowest point. Aamar, coming to you, Mankind Pharma. How is this one looking on the charts to you? Do you think it will be able to sustain the uptick that we've seen in the pharma stocks of late?
Yeah, if I look at Mankind Pharma, what I'm seeing is that the trend is definitely strong on the chart. So on the intermediate term trend, the trend is clearly visible. And also, if we look at what the stock has been doing over the last few trading sessions, there was consolidation, and the stock did dip towards the 2000 levels. Again, it's up from there. Currently, it's up almost 4% today. And if I look at the levels, so the levels to watch out for the stock is around 2170, 2180. That's the level to watch out for the stock. And if we go back and see on, I would say, 12th of December, the stock had huge and significant volumes that day. So that tells me that there is a lot of buying which has happened at that level. And it could be further possible that once the stock starts sustaining above the 2170, 2180 levels, then the stock has the potential to rally towards the 2250 levels.
Okay, surely keeping an eye out on that. But let's move on, talk about Netweb Tech, and this one is in focus after AXUS has actually initiated coverage on the stock with a buy ad rating and a target price of 1,360 rupees. So the stock as of now is locked in upper circuit. They believe that this company is a standout in the HCS market, long-standing relationship they have with marquee clients, diverse customer base, as well as high repeat business is something that works out well for the company. They are expecting, the brokerage is expecting a healthy earnings growth ahead, and they expect a 38% revenue growth over FY23 to FY26 and a 44% profit PAT CAGR growth over FY23 to FY26. So quite positive on Netweb, and that is why the stock is locked in upper circuit.
All right, moving on, let's put the spotlight on Zee Entertainment then. And today, if you see, Zee Entertainment has seen a sharp recovery over the, when you compare it to the previous day's losses. Right now, it's trading higher by about 1.3%. And the reason for this sort of a recovery coming in on Zee Entertainment today is the fact that reports on a global media report, that's Nikkei, has reported that Sony is continuing talks on the deal to merge its Indian unit with Zee. They are also saying that the talks are going to continue till January 20th. So on back of that, you saw the stock actually see a recovery, snapping a 3-day losing streak. And yes, we don't know which side of the fence will the deal go, but for now you have Sony clarifying on that merger talk.
Okay. Let's move on and talk about the next stock, and that is on the charts. And Glenmark Life Science, in terms of that, Aamar, what are we expecting from Glenmark at 745? Do you still expect a further uptick, or maybe time for some consolidation to continue?
Yeah, I would say that if I look at Glenmark Life Sciences, the stock in September 2021 had made a high of almost 800 levels, and currently it's around 745. And also what we see is that on the 2nd of January there was a lot of buying interest in the stock as compared to the daily averages. So that's been significantly higher, and then we did witness consolidation for a few days, and then again today the recent high of 735 that has been taken out. If I look at the long-term charts and the intermediate term trend, that also tells me that the stock has a potential further to rally towards the 800 levels. So this is one stock one can definitely look at, and any correction can be used as a buying opportunity in the stock.
All right, moving on, Ankita, let's talk about Vedanta, and this one was under pressure, and what was the reason for that?
Well, yes, Vedanta was under pressure. In fact, it was down more than 2%. That has recovered beautifully. It is up, in fact, 3% from the day's lowest point right now. But the downtick came in after the ratings agency Moody's Investors Service downgraded its rating on the senior unsecured bonds issued by Vedanta Resources to CA from CAA3. Now, the rating of the corporate family rating of Vedanta Resources was also downgraded to CAA3 from CAA2. And, according to Moody's Senior Vice President Kaustubh Chaubal, he said that, we view the debt restructuring as a default avoidance and access that the creditors have incurred an economic loss. With respect to the original promise, we consider the transaction to be a distressed exchange under our criteria, which underpins our downgrade of VIL's ratings. And on the back of this news flow, Vedanta is in focus today. It was down, but it has recovered from the day's lowest point right now.
Okay, that was stock number 14 and the last stock for today. So thank you so much, Ankita, as well as Aamar, for joining in with us. And it's going to be a goodbye from Sheridan, myself, as well as the team who put this show together. But a programming alert for you all as we wind down this edition of Market Fatafat. The countdown has begun. Mark your calendars for the 11th edition of IDFC First Bank presents ET Now Leaders of Tomorrow Awards. As India's longest running TV show, ET Now Leaders of Tomorrow has championed the development of the startup, SME and entrepreneur ecosystem in India for over a decade now. It is the 11th season. We are focusing on innovation as a key catalyst for growth and disruption. With the theme Innovate to Elevate, Leaders of Tomorrow Awards will acknowledge remarkable strides made possible through the power of change. Catch the 11th edition of IDFC First Bank presents ET Now Leaders of Tomorrow Awards live on 12th January, this Friday, 5 p.m. onwards.